All right, hello and welcome back to another weekly edition of Stock Market Mutterings, where I shall do my very best to take a grope in the murkiness to find you the best trading setups for the week. This is for the week beginning on 9/24. As always, if you guys need some help with your personal trading, visit thelincolnlist.com and click on the Trade Room tab, and you can start trading with us right away. As I start out every one of these, taking an overall snapshot of the market, I have to say what's happening on the screen and what you're seeing is completely different than what I'm feeling personally and what I'm experiencing with individual stock names. Now, what I mean by that is if you're looking at the market, especially the Dow, it was at ripping pretty much the whole week. SPY hitting some all-time highs. Little discrepancy, obviously, in the NASDAQ. Some of the air has come out of that, or the rotation from those tech names has been pulled out and into some other things. But if you were just looking at on the outside and just looking at those numbers specifically, or just trading that instrument, you may be under this impression that everything was just bullish as usual. And it looks that way when you're looking at just the indices there. But most of this stuff I was trading, unless it was just the select names that I'm trading, but I usually look through about 100, 120 stocks a day, most of the big FANG names and others. It was bearish. I mean, most of these things could not, and when I say bearish, I'm not saying that they were breaking down certain bear levels or going through these massive retracements. It's just the behavior of these stocks were different, such as not being able to hold breakouts, not getting any interest at certain levels, and just putting on these slow fades. Now, that's something we're going to have to watch out. It's obviously, we've seen it before. I'm not saying it's going to be a market crash or a big correction, but let's watch that as it progresses to see if there's more rotation that comes out of those names, and that's something that we will talk about. For example, we had some of these, for the recent memory, really strong stocks like NVDA just not being able to really produce anything. You're on like a 4 or 5 day skid here with NVIDIA. Wayfair, something that's been enormously strong, on a 4 or 5 day skid here. Again, yes, they're up still substantially for the year, and some of the money needs to come out of these things anyway. They could be, debatable that they were overbought in the first place. But again, point here is let's go ahead and look at these as we progress throughout the week to see if they start taking down some other levels, because some of them are starting to reach the 50 moving averages. One of those names here is SQ, and I've been bullish on this SQ for a while, and it's been a good trading stock, and it's been nice. That's starting to be one of those ones that feels a little bit different, which means it's the breakouts that no longer sustain. If you go back here and you look a few days ago, I don't know, it's 9/17. You had a breakout. I don't know how well you can see this daily chart, but you got a wick right here at the top at 9/17. So when this thing was all printed in green at that time, if you could kind of picture that in your mind, it had broken a 2 to 3 day consolidation period. Now, based on its past behavior, it should have traded at least back up to the 92 areas there on the higher chart, and possibly broke through like it did last time. Once it got through there, it popped back up. Instead, it completely sells off, and then the next day hits the 20 moving average. That's this green line here. So right now, over the last couple of days, it's just been hanging on to that. And if you look back when I'm saying the inner workings of the market, numbers of the market are one thing, what's happening to stocks are another. It's stuff like this, trying to break out on Friday, going down into lows, a really lame rally, can't get out of its own way, then ultimately rolls over. So sometimes these are the signs, here breaking out on Thursday, selling back into a moving average, and then just, deadlining the rest of the day. That's something I noticed in a lot of stocks, and something I want to pay attention to, because oftentimes people think that corrections in stocks or sell-offs in stocks in the market just happen overnight. You just wake up one day, but there's usually these subtle little signs about just changing in a certain security or the market's behavior. And that's one of the things I'm basically saying to you right now is, thinking back of last week, I feel that some of this stuff just wasn't acting like it had been for most of the year. We shall see what happens, will we not? Now, another one of those here, we're going to talk about some of these FANGs and stuff. Apple, this looks like something that very well may be, and I'm going to get some heat for this. I love this stock. I own it in my 401k. Owned it for a long time. For my whole life, I'm bullish on this thing. But for the short term, as a trader, you got to think that maybe you're going to get a breakdown here that could result in a pretty good trade. A temporary trade, of course, yes, a day trade, whatever it may be, but you've got some support here. And this, again, you're going back to the beginning part of September here, where this thing got down into this 217.70 area, somewhere in that spot. And then you tested that again on the 17th, and then for the last 3 or 4 days after, it was not able to hold anything. Again, starting out Friday trying to break out, then selling off, and just kind of deadlining there. Same thing here Thursday, ripping in the morning, giving a good chunk of that back, and deadlining again. You're reaching this level, and what I'm saying is this is obviously a triple bottom here now developing on the daily chart. If that 217 area goes, the lower portions of 217, I would expect this thing to sell down into this 50 moving average, and then who knows, maybe a little bit deeper down into the base of the consolidation from August, which was 206. So there's a little bit of room in there for a trade. If the market wants to start out with some weakness and sell off a little bit more, again, not saying it's going to crash or dump or ruin people's lives here, but you could see a nice little trade back down to the base of that range with Apple. Facebook's another one there, and this 160 has been a really solid spot for this thing. So going into last week, I talked about if this thing was to break 160, or when we got to 160, we would see something. I thought it was going to be a bearish event there because it just was falling over, and then it just squeezes up for 2 days. It bounces off of that 160 there on Wednesday and Thursday pretty strong, and it's giving you like, okay, this thing really wants to hold on to that 160. It's defended it twice, solid double bottom on the chart. It should start trading back up over here to 178 to this next resistance. And then when I guess you could say the resistance here from 9 and 11 was 167-ish. But then Friday comes along, and boy, you get a pretty big selling. Now, one thing I should say is I don't want to base everything solely on what happened Friday. We know it was a quad witching event, and I don't understand 100% of the whole global rebalance or whatever that thing is. I don't know if that's got any impact to cause some of this to sell off. Again, more data will come in Monday and solidify a lot of these charts, and that's what we do as traders. We can only look at a chart and see a potential setup possibly happening, but maybe only 20 or 30% of those pan out, or it goes that way because there's other factors that have to take place. So when you look at this thing, 160 is that level. If you trade back down to 160, if it loses 160, this thing is probably going to sell off down towards the 150 area. And I would think you'd have to be short biased. If it fights that off strong again, then maybe that's a shorter term bottom and you can see something more of an extended rally out of this than just 2 days. Again, more data will come in on Monday, and a lot of this stuff will wash itself out. And I think last I'm going to throw this Splunkster in here. This was another one, and it's just been smoked really for the last few days. This thing got up around highs just a few weeks ago there on 913, sold off immediately when it hit that resistance, turns red, sells down, goes through the 10 moving average. It's washed out down here at really what is the base of support, 115.20s, which was the gap up from earnings. I mean, this is just like a Facebook here where you're really evaluating the importance of certain levels. And you see this thing and you say, look, if it doesn't hold this level, it's just going to beeline into 111, which is the 50 moving average, and maybe even possibly fill in the earnings gap of 107. So let's just watch this. Again, some of these are approaching levels, important levels, where it's really a do or die situation for the stock, at least in the short term. Not overall, like it's a do or die for Apple. They're not going out of business. I get that. But for the shorter term, you got some do or die moments here where some of these things are starting to rub up against some important levels. So we're going to see whether or not they hold them and you can make some money off of a solid support bounce, or there's a little bit more aggressive selling in there, and then you'll have to switch your bias to the short side. We shall see, right? We shall see. So anyway, I'll leave it there. As always, if you guys need help with your personal trading, you know how to reach out to me. Thanks for watching this video. Take care. I'll talk to you next week.